Hello, this is Richard Peers from Finextra TV Unplugged, and I'm delighted to be joined today by Antony Jenkins. I'm sure known by everybody as the founder and executive chairman of 10x Technologies and obviously the ex-CEO of Barclays. Antony, hello.
Good morning. Pleasure to be here.
Good to see you. Thanks for joining me virtually. We had to put off the chat that we had lined up for you and I to talk personally, but I'm so kind of you to actually join us today. We wanted to talk about, in this sustainable finance channel, about banking and the purpose of banking. I know you've got strong views on this, and particularly, looking back to announcements from the Business Roundtable, where they spoke about, the new stakeholders, the new capitalism, the need to deal with people, profit, and planet. Give that as a context, given your pretty unique perspective, in a technology role now, but having been a banker. What do you think about all of this? Is it doable?
Well, let's start with banks themselves. If you think about the banking system, it sits at the heart of the economy. And of course, the economy sits at the heart of our society. So if we want to have prosperous, growing, stable, successful societies, we need to have growing, stable economies. And to do that, we need to have a functioning, effective, and fair banking system. So banking is unlike many industries. All industries are important, particularly as we're seeing at this current time, but banking is particularly important because in a sense, they're the multiplier for all other activity that happens in the economy. So we have to get banking right if we want to get the economy right and if we want to get society right. If I come to your point about the discussions that are now in vogue about stakeholder management, like many things, there's nothing new under the sun. These ideas actually go back hundreds of years. And if you look at Barclays, for example, Barclays was founded by 20 Quaker families in the eastern part of the UK. They believed in doing business in the right way, but they also believed that making money was a good thing. So it's this question of stakeholders is not about a simple distinction between capitalism and socialism, or making money and not making money, or one stakeholder group over another. It's actually much more complex than that. And it's complex in a couple of ways. The first way is, who are these stakeholder groups anyway? At the end of the day, all they are different manifestations of the citizen. So if you think about customers, of course, they are citizens themselves. If you think about employees, they're citizens. If you think about shareholders, we always think about shareholders as, oh, it's legal in general, or it's BlackRock, or it's some other. But who are they really? They are simply the agents of large insurance companies, sovereign wealth funds, family offices, and that money itself is owned by the citizen. So at the end of the day, the stakeholders are just different manifestations of the citizen. So for me, this question is interesting on one level because you are trying to balance the different interests of those stakeholder groups. And of course, there's no better manifestation of citizens than the planet, right? We're all citizens of the planet. But actually, it also goes to the trickier and less well talked about question, and that's the question of agency. So the people who are actually running large organizations, whether they're in financial services or non-financial services, this is really about their responsibilities in managing the different interests of these stakeholder and citizen groups and their own interests. Because this is the thing that's never really discussed in this conversation.
Yeah. Yeah, go on, carry on, Antony. I don't want to interrupt.
Yeah, and so if I look at what the Business Roundtable came out with, it's of course in many ways common sense, but actually what it really says is, if I want to have a successful business, I need to have customers who like buying my products and services. I need to have colleagues who are engaged in delivering those products and services, and then my investors will make money. And this is not a radical idea. I mean, when I was at Barclays, we did an analysis of the branch network. In those days, we had 1,600 branches, a lot fewer today, of course. But when we looked at customer satisfaction employee satisfaction and profitability, the highest profitability was in the branches with the most satisfied customers and the most engaged colleagues. When I left banking and started, looking into the technology world in Silicon Valley is obsessed with net promoter score in their portfolio companies, because they know that if they have satisfied customers inside their portfolio companies, the companies are going to do well. So this is not a radically novel idea, that you have to, if you want to deliver high performance, satisfy all of your colleagues, your customers, and of course your shareholders. And you have to do that in the context of your obligations to broader society. And one of the things that, helpfully, I think economics brings to this debate is the notion of externality. So, lots of businesses create externality, but they don't often think hard enough about what those externalities are, how to minimize them, and how, their results effectively should be adjusted for that. And, one of the big things I always used to talk about was, let's talk about travel, business travel. Now, today, that seems a sort of curious anachronism from the past. But in the days when people used to do business travel, there's no way that you can reduce the carbon generated by a business trip. You can offset it, but you can't eliminate it. So that's a sort of trade-off between, what's the business need and the carbon that's generated in the economy.
Antony, that's very interesting. I think people will be really interested in your point on externalities. Can you give us a sense of how people are going to be able, corporates and people are going to be able to accommodate externalities within their balance sheets and with those multiple stakeholders you've outlined in mind?
Yes, and I think it's important that we draw a distinction here between stakeholder groups, which again, I firmly believe are just code for different manifestations of the citizen, and management and leadership of the company, where the agency issue comes into play. Because in any enterprise, whether you're running, a huge enterprise like Barclays, or I suppose 10x today is a medium-sized enterprise, there are continuous trade-offs that you have to make. How do I price my product? Do I price my product so I don't make any money at all, which is good for customers, but not good for necessarily shareholders? How much do I pay my employees? We see this, with the gig economy. Yes, gig economy provides flexibility for people, but there's very little benefits or job security for them. So how do we firstly strike this balance between the needs of these different stakeholder groups? And of course, there's no perfect answer to that, because you can't make everybody happy all the time. And it's futile to try. But what you must do is show that you are considering these different trade-offs, and that you are transparent in how you make those decisions, and transparent in how you then action them. And one of the things that I believe will be really important, if we're going to give this debate teeth, is for enterprises, and particularly publicly quoted enterprises, to publish a balanced scorecard of commitments that they are going to make to each of these stakeholder groups. Because they need to say transparently, this is my standard for customer satisfaction. I'm going to use NPS. My target is to be in the top quartile of NPS in my industry. My customers will be satisfied with what I'm doing. I'm going to deliver this return on equity to my shareholders. I'm going to have this level of colleague engagement. I'm going to measure how society feels about my company, my organization, through some kind of survey mechanism. And then I'm going to present those results back every year, just as I present back my financial results. And this is entirely doable. We did this at Barclays when I was there. And critically, when we did it, we ensured that every single metric, and we had 8 metrics in the scorecard, were auditable to the same level that you would be able to audit your financial results. So there could be no sort of messing around, obfuscation, sleight of hand here. And we also said, we're going to have a set of 5-year commitments. And then, so every 5 years, we'll set this balanced scorecard. and we'll update every year against progress. So you can't, move the goalposts every year and say, oh, sorry, market's got a bit harder, so we're going to flex down our colleague satisfaction or engagement score. We're going to flex down our customer satisfaction. So 5 years. That way you can assess the performance of the enterprise against the standards that it's set. Now, the second problem, which is trickier, is this problem of agency, right? We see this now in the COVID crisis where, industries like aviation are asking for the support of society. But those industries have, undertaken massive share buybacks and paid huge dividends over the last 10 years. Now, that might not be the wrong decision, but you have to be transparent about how those decisions were taken, why they were taken, and what the consequences of those decisions are now. And critically, to eliminate the gap, the agency gap between the stakeholders and the leadership of companies, aligning management incentives against delivery of a balanced scorecard then allows you to bring everything together. Now, I'm not saying
that integrated reporting, showing the triple bottom line, and you spoke there about the need to have the incentives, avoid the obfuscation, have it over a sort of measured period of time. I mean, those are all critical things because that element of trust has to be built back up again, doesn't it? So can we go even further? I liked when you were talking about the auditability, if you like, or the accountability of those metrics. What can we also be seeing so that people are not just using ESG reporting in the world of sustainable finance, which is based on disclosures, but also, externalities, material world data coming into that scorecard? What technologies, what things can be done, processes, etc., to really give that transparency?
Yes, and in fact, if you look at the 3 of the 4 stakeholder groups, there are well-worn paths to measuring things like client satisfaction, colleague engagement, obviously return on equity, etc., etc. Where it gets trickier is in this question of how do you measure the perception of the organization and its ability to deliver its obligations to society. Now, one of the things we did at Barclays was we looked at reputation. So we created a survey of how the enterprise was viewed by key actors outside of the organization. So this could be politicians, media, third sector groups, and so on. And we constructed a universe of those folks which aligned to our business footprint, both by line of business and geography. So we were trying to have a mirror that kind of reflected back to us society's perception of what we were doing. Now, I recognize that in some ways is a mirror that is a subjective look at what we're doing. You can, of course, then align it to much harder kind of issues. So you could align it to, for example, measuring things like carbon consumption. At Barclays, we always had a policy of paying London living wage. So things like, but I very quietly but systematically eliminated the use of 0 hours contracts in our supply chain across the organization. We didn't make a big song and dance about it, but so you can take a sort of subjective mirror that reflects society's perception of you and combine it with some hard metrics, depending on the industry that you're in. But critically, I would say that the rabbit hole that people fall down on this stuff is you are never going to make everybody happy. It is just impossible. So what you must do is you must pick the things that you are going to be committed to delivering, be transparent about where you're delivering and where you're not, explain what you're going to do about it when you're not, and then run your business on that basis. And when you come to a point of disagreement, at least you can explain the reason for that disagreement.
Yeah.
And you can then have a logical argument about, yes, I understand that, for our colleagues, the 0 hours contract issue, I understand that for some people, 0 hours contracts are attractive because it gives them flexibility, but they are not things that we as an organization intend to support because we don't, in the round, believe that they're positive things. You get to thorny issues like, taxation and how the company organizes its affairs. I believe that large, complex multinationals should have a published policy on tax. And if their policy is, our policy is to pay as little tax as possible because that is a benefit to our shareholders, they should say that.
Yeah.
And then society can, evaluate them against that and say, okay, well, fair enough, if that's how you feel about it. But we don't actually agree because in our country, you generate £1 billion of profit, but you pay no tax, and we don't think that's right. So we're going to adjust that. So, that what I think what people often mistake what the Business Roundtable came out with, and many of these other discussions as, the difference between saints and sinners, and it's always characterized in these black and white terms. It's actually much more nuanced than that. It is about creating a balance. It's about creating a truly sustainable enterprise, and it's about being transparent.
Antony, I was interested in one of the things you were talking about there, in that you can't please all the people all of the time. It's so true. But if you obviously are very clear about the products and services you offer people, and you show them what's underneath them, so let's just think of a current account. Where is my money being held, and what is it being used for in terms of the onward investment of the bank? As long as that is transparent, then of course you may not please people, but they can make a choice. It's pretty tough, though, for large banks to be able to be that transparent. How do you think that aspect of sustainable finance within large large banks like Barclays can be actually put into practice?
Well, it's very difficult for a individual saver or current account owner to say, well, my money went to support the local restaurant, or the local hairdresser, or the local airline. It's very difficult to say that because, frankly, that's not how banking works. I mean, the way banking works is the money goes into one side of the balance sheet, and then it gets deployed on the other side, and there's very little connection between them. But what is very important is that for the customer who is not well versed in the ways of finance for the most part, to be able to clearly understand the business practices of the bank, and for the bank to show that they operate fairly. Again, banks can't lend money to everybody who wants to borrow money. That would be wrong for them, and actually wrong for the borrower, because if the borrower's borrowing is not sustainable, it's not helping them to get them into debt that they can't service over time. So the bank has to be clear about, I'm in these lines of business. I support small businesses, medium-sized enterprises, multinationals with these products and services, and I do business in the following way, which means that I'm clear about the products and services that the customer is supplied with. They're fairly priced. When there's a problem, I deal with the customer fairly. I mean, this is basic stuff. This is not rocket science. And so when you deal with these very large aggregated enterprises, being able to pull out, as I said before, transparently their key behaviors and actions is critical.
Absolutely. And so when you move forward, I mean, there are obviously much smaller institutions out there, we've interviewed on here, who set out their whole store to actually be based on, investing in things which can be evidenced transparently. Both sides of the balance sheet are actually tracked and traced and evidenced transparently. But they did that from the beginning of their genesis, and they've done that using technology. Now, in your capacity at 10x, you're embracing all of these new technologies. Which of those things that we hear about, sensors, satellites, blockchain, AI, and so forth, do you think will allow us to sort of gear shift to give us better traceability down into these externalities, and then get to a point of evidencing them in the way we've just been discussing?
Well, clearly, machine learning and artificial intelligence can be incredibly powerful tools in managing data. Likewise, blockchain allows you to record records in a distributed fashion, which conceptually can allow you to transfer ownership of assets much more quickly and cost effectively. So those are very important technologies. But underlying your question is a third area which people don't really talk about, and that's data. Now, banks have lots and lots and lots of data, but the problem with it is that it all sits in distributed systems that don't talk to each other. And the customer themselves appears as an entity in the bank's records many hundreds of times in different guises. So I might be there as, A. Jenkins, AP Jenkins, Antony Jenkins without an H, Antony Jenkins with an H, and so on and so on and so on. And so one of the problems the banks have is aggregating data back up so they can form a complete view of you as a customer, which of course is the predicate upon which you can then do the analysis to show how sustainably business is being done. So for me, and this is why we set up 10x, fixing that data problem is job one. In order to be able to use the tools of machine learning, AI, and distributed ledger, you have to have the data in one place. And that is incredibly difficult for banks to do today. The best they can do is really suck it out of a lot of disparate systems, dump it into a data lake, and then try and clean it up before they do something useful with it. So data is really the key to this.
Yeah, absolutely. And do you think that banks are, the guardians of data? And if we think about, identity, which is obviously key to making sure that the person that puts the data in at any endpoint at one point is who they say they are. You spoke about DLT as a way of actually making sure that there is a traceability of that data exchange, and there are other technologies that can do that. And then obviously the stewardship of that data with things like ethical AI principles being put in place. Are banks the people that should be in charge of that? And if not, who else?
Yeah, so it's far from clear to me that banks are the natural custodians of this information. And one of the things that I am passionate about is digital identity, a controversial topic for sure. But actually, in the sort of COVID world, we're showing how important digital activity is to us. But you made a very important point. Data without identity isn't that useful. So if we can create a digital identity that can be permissioned by the customer when they choose to use it, applying for a product or service, for example, from a bank or anybody else, a mobile phone account or whatever, then we could actually have much more effective use of data. But for me, the natural provider of a digital identity is the state. The state provides us with a physical identity. They give us a passport. We choose when we want to use that passport or not. They give us a driver's license. We choose when we want to use that. The state could do the same thing digitally. And although people get very concerned about privacy and so on, I think they are the only actor that makes any sense to confer digital identity upon you. Now, when you put digital identity with cryptography, you can actually imagine quite large data sets being protected cryptographically through a key. So your actual identity would only really be known to you digitally, but accessed via a key. So everything that existed in the bank, for example, would exist as a record, but it wouldn't be connected to you as an entity unless you permissioned it. And you could permission that only at certain times. So when you're applying for credit or something like that, or mortgage. Yeah. So the technology exists to do all this, but we really need to grip it because it's the only way we're going to create that traceability, to your point, and sustainability over time. Because right now, the ludicrous process for most applying for most things is, show up with a utility bill. Well, who's got a utility bill these days? Most people pay things online. And if you wanted to, you could knock one up on your home printer pretty easy. So it actually gives you no protection at all. And though digital documents now increasingly can be verified electronically, I would actually be much happier with a secure digital identity, access through a wallet that people could control themselves. And even the state wouldn't, necessarily be able to access the underlying information, but it would speed up a lot of the processes of our lives today.
We could talk forever. I mean, I really do enjoy this conversation, but just thinking now, there's a lot of things that we've spoken about, and we know that I think Bill Gates said we overestimate what's going to happen in 2 and underestimate what's going to happen in 10 years. What, given the crisis that we've got, we do as some sort of key 3-step building blocks, if you will, or just one key initiative that you would highlight to try and get to this vision that we're painting of a sustainable world where we have our identity, and we've got the banks looking after our data, and we've got a good sense of that our money is being used for what we want it to be used for. What can we do? Well, give us a few steps.
Yeah, so I would say there were 3 things out of this conversation which I would do if I were, I suppose, in charge of everything. The first thing is I would create a digital identity because I think that is critical. The second thing I would do is massively improve the digital backbone of the UK, because our economy is increasingly digital. It will be even more so after COVID. But, the problems that people have, and I'm not even talking about remote parts of the country, in large cities to have high speed connectivity are just getting in the way. It's like trying to have the Industrial Revolution without canals. We have to put in gigabyte speed, and this will need to be a partnership between the state and the private sector, because the private sector will never get there on their own. And then finally, I would say, if there was one thing that I could change to drive this question of purpose and of responsible business, it would be to require by law a balanced scorecard. If you look at the Companies Act of 2006, it says that companies must run their enterprises with regard to the interests of their stakeholders. And people who were involved in drafting that legislation at the time tell me that it was quite hot contested as to how much regard there had to be. But I think if public companies, at least, were required to publish a balanced scorecard along with their financial results, we would start to see some real movement here.
Fantastic. So the integrated report's really coming to the fore. Antony, thank you so much for your time today. I really appreciate it. Hopefully we can get together and have an interview face-to-face another time. But for now, thanks for joining us over the wires, so to speak. Thank you.
Thank you. It's been a pleasure.